Good morning. Let's hope it is. It's 9 a.m. here in Hong Kong, in Beijing, and in Shanghai. Welcome to Bloomberg Markets China Open. I'm David Ingles with Yvonne Man.
Our top stories this morning. Market weakness extends as traders wind back bets on aggressive rate cuts this year. Heating warnings from central banks. And Hong Kong and mainland stocks on watch after that brutal sell-off yesterday. China's testing investor patience by downplaying hopes for big stimulus. Plus, Samsung turning to AI to boost its flagship Galaxy phones as it loses its crown as a top smartphone supplier to Apple. We'll talk about Samsung in a moment, but we still got to talk about this bloodbath that we saw in Greater China markets yesterday, particularly when it comes to Hong Kong. You got to wonder, is this capitulation now, Dave?
Well, everything that happened yesterday, to your question, does answer that question in the affirmative, right?
Yeah.
Whether that's this collapse in price, this explosion in volumes, the market cap that's just simply been wiped out of this market. And you really got to wonder, you know, what I was thinking as the market was tanking 5%, you know, who else is selling? Like, you know, what foreign investors still hold positions in this market? But I guess we'll see what is open.
And what triggered it, right? Was it the data?
That's correct, yeah.
Was it Trump and what he thinks him winning that Iowa caucus just led to China to sell off? Or was it this whole Fed discussion here that we're still kind of...
I mean, all three did not help, that's for sure.
Yeah.
That's for sure. Worst day in 15 months, everything was down, nearly 100%, double the average in terms of the volumes there. So we'll see what today looks like. In fact, just have a look at futures right now, just getting underway over in Singapore about a minute into that specific session. Nikkei is, I think, holding the fort again. We are up on the benchmark. We're down in most as far as market breadth is concerned. U.S. futures are flat as we speak. Let's flip the boards, please. You have Taiwan coming online. Within Taiwan, you had, to Yvonne's point, a warning that the exchange urging investors to remain cautious amidst, in Taiwan's case, the biggest foreign outflows going back several months. You have the TSMC is reporting earnings today. Samsung, of course, with the flagship phone in that market opening up, of course, about an hour back. Some weakness yesterday. We're seeing some of these commodities catching a slight bit after the weakness in the likes of copper, for example, fell quite a bit in the Wednesday session. It really comes down to Yvonne's point in terms of macro, this repricing we're seeing in the bond markets and a massive move up in gilt yields. We can talk about Madame Lagarde and her comments in just a moment there. As far as the Fed goes, we're back now to basically a coin toss in terms of probability, if whether or not they cut in March or so. We are on track with about 2 full days left for the worst week for global bonds, global treasuries, going back perhaps 14 months, right? We'll see what 2 days last. And, of course, dollar strength continues to permeate. Aussie dollar pierced through 50, 100, and 200-day moving averages in the span of just 2-3 days there.
Yeah, and you talk about what we've heard from Europe so far, right? That UK inflation print certainly did send some shockwaves, that perhaps that last sort of leg down to reach 2% inflation is going to be a lot harder to get to in some ways. So you see the repricing of BOE cuts, and for one thing, and then the ECB as well, with Christine Lagarde speaking in Davos to her very own Francine Lacqua and really pushing back on some of those rate cut bets for the ECB too. Let's take a listen.
I would say it's likely too, but I have to be reserved because we are also saying that we are data dependent and that there is still a level of uncertainty and some indicators that are not anchored at the level where we would like to see them.
For more, let's bring in Bloomberg's executive editor for Asia markets, Paul Dobson. So Christine Lagarde really trying to push back on this a little bit, that maybe rate cuts, at least for Europe, is more of a summer sort of story versus spring. I mean, can we apply the same sort of thinking to what we're seeing in these bond markets here right now, this repricing?
Yeah, well, this is the message that policymakers want us to believe, that they still want to keep those interest rates higher for longer. And I think, you know, there was something telling within what we were hearing from the ECB, which is that it's not really helpful for the market to be overly aggressive in pricing the cuts because it's already loosening the financial conditions when they're still trying to wrestle inflation to the floor. So they want to see those bond yields higher. They want to trigger that little sell-off in the fixed income markets in order to keep financial conditions tighter for longer until they're certain that inflation can be beaten. So we had a combination not just of those comments from Lagarde and the other ECB speakers yesterday, but also a surprising beat on the UK inflation data. And that sort of is another, reminder that we're not quite done here yet. It's not certain that inflation is going to continue its nice glide path down, and the policymakers can cut almost at their leisure. We went into the US session, we saw more follow through, more of the same. But equities aren't liking it. Equities aren't enjoying the volatility that we're seeing in the bonds market. They don't like the idea that actually interest rates are going to remain elevated for longer, and hence the turbulence that we saw in the markets yesterday.
Yeah, and China at some point, remains front and center there, Paul. And let's talk about what happened in China and where coverage probably is among your team, of course, going into today. And one of the things that I was thinking yesterday was, are we now on intervention watch when it comes to the equity market?
Well, I think that we've seen some pickup in some of the domestic ETFs focused on China's markets in the past couple of days, the likes of which invest in the SOEs, and there's a suspicion then that there is some supportive measures. We even heard from one of the sort of state-owned investment funds that they said that they stand ready to help. So yes, there may be some supportive measures, but the strength of the force of the selling, as you were talking about, David, in the intro, was just so strong yesterday that it kind of blew any potential support out of the way. Now, could be that was that last sort of like final moment of capitulation selling from the investors that have run out of patience. I thought what was interesting is it wasn't confined to mainland China or to Hong Kong, but also Taiwan and South Korea as well, both seeing pretty huge moves lower. So it was more of a China and China-related equity markets sell-off. But perhaps that's been enough to kind of clear the decks, and we can have a bit of a sort of fresh start again today. We'll be watching the market very carefully to see where it goes from here.
Paul, thank you so much. Paul Dobson, there, our Asia Markets Executive Editor. On Paul's point, Kospi is up, Taiwan is up, A50 futures are up. We now have some breaking news before we continue the market conversation here on Singapore. I'm just getting word in my ear. Okay, so Singapore has now charged its Minister Iswaran after this corruption probe. The minister has pleaded not guilty after those charges. That's all we know so far. We'll get you more details on that. Back to the market story now. That market also coming in line, of course, over in Singapore. Let's bring in Xiaolin Chen, Head of International at Crane Shares. Xiaolin, pleasure to have you on the show, and thanks for staying up for us.
Good morning.
This market, the Hang Seng Index, is trading at 7 times earnings. Arguably the cheapest this market has ever traded, on average. What does it tell you when something this cheap is not attracting willing buyers?
Good question, David. Thank you for having me. Particularly, I heard your earlier interview of why this sell-off yesterday was so dramatic in the market. I've asked myself, what was the driver? What caused the reason of sell-off? Has the fundamental support of the policy announced by the government retrieved, changed? Has the liquidity been put into the system, get retrieved, and no more liquidity, these liquidity issues? Has really the GDP of 5.2% really disappointing results? None of them are true. None of them are taking any box for me. It's a combination of a few things, like the U.S. Treasury, 10-year U.S. Treasury yields, surged past 4% again. Market now expect potentially a longer period of high interest rates. That's weighted heavily on risk assets per se. Unfortunately, Asian, including China assets, are in the category of risky assets. So they experience heavy sell-off. And there's also a very high daily turnover on the callable or bull or bear contract, the CBBC, $9.7 billion of daily turnover that forced a lot of those contracts being just sell or redeem, and that caused some of the corrections in the index. At the current level, clearly market is reacting disconnect with fundamentals, disconnect with corporates' strong earnings, and also disconnect with potential the liquidity pickup in the domestic market may actually support the corporates to have even stronger earnings in the quarters to come.
We were talking a little bit more about, is this the time to start speculating some sort of state buying? We saw some record sort of moves in turnover in some of the China ETFs. None of yours, China AMC, Harvest CSI 300, I mean, E-Fund and the like. I mean, have you been seeing similar activity on your end?
We literally, yesterday, this is obviously confirmed trade, we literally see inflow to, KWEB fund, KWEB fund. That's our pre-shares CSI China Internet Fund yesterday. Literally, clients are now seeing a opportunity to phasing in. So this is official confirmed numbers, so I can talk about it. So we literally have long-term investors are on the fence and watching. So all these things we have discussed, Yvonne and David, was fundamental are strong there. China is not a liquidity issue. It's really a how and when the credit get pick ups. We stay high hope. And the NPC happening or is going to happen in March. We do expect policymakers realizing they need more clear directives where and when to invest and direct the corporates where they should take the liquidity and to invest and deploy the liquidity to help the economy to recovery. And if I may just some attention to say, some of the data release, I agree, is a bit of a mix. But at the end of the day, it's really the first year of China out of the pandemic restrictions. It's the first year for the country to focus growing its economy, provide the liquidity, and they deliver 5.2% GDP. And I hear people saying that was disappointing. We are talking about trillions. We're talking about second largest economy in the world, deliver a 5.2% GDP. I don't think that's, we quite disagree with the disappointments around GDP return.
Well, let's pick up on that because the investors want massive stimulus. The economy doesn't seem to need massive stimulus. They met their growth target with their eyes closed last year. They'll probably meet 5% this year with incremental stimulus. There seems to be a disconnect between what the economy needs and what investors want. While that gap exists, will the premium remain in this market?
For some period of time, David, you rightly pointed out, there's very sufficient fundamental policy. It could be more clear. All the policy meetings happened last year was one key message, pro-growth, right? Every single meeting. And the liquidity is sufficient. We're talking about trillions. You asked me on liquidity, here you go, this is liquidity, but very targeted liquidity provided to the systems. Why it's not picking up? But you do see China is slowly, gradually rebalance its economy to a bit of a new form. If you notice the recent new top 3 exports from China to the rest of the world are smart TV, batteries, and also in the renewable energy or renewable energy related products. So I do think China is at a very interesting point. One is getting out of a very much of a lockdown period for 3 years as first year, number one. Number two, also rebalance its economy to a new form of growing for long-term and more sustainable way to grow its economy.
Yeah, can you tell us a bit more about some of these bright spots, right? Because we're certainly seeing tourism stocks that have been certainly quite resilient in the face of this. I mean, Harbin tourism is hot right now, Shaolin. I mean, is that sort of like something that investors can really kind of look at in terms of maybe positive signs of this market still?
Yvonne, I'm very proud with Harbin's achievement. Harbin is my hometown. I was actually born in Harbin. This ice sculpture happened in Harbin for 24 years, and this is the year for them to finally to shine. I was very proud with the results. For the New Year time, in the 1st of January, 3 days of national holiday, the city is not the tier 1, tier 2 city, slightly lower tier city, but they welcomed 3 million people to the city in 3 days and managed to get 6 billion RMB revenue just in 3 days. It just shows domestically in China, people are spending cautiously and people are spending differently. What do I mean by that? Is now they're looking for leisure, They're looking for things that make them to more relaxed, more enjoyable, and Harbin is a classic example. So I do think there's more to come. Obviously, there's a lot of social posts saying Harbin is ready to welcome not only 3 million people in 3 days, but 300 million people in this entire winter holiday and Chinese New Year period holiday. I certainly hope now with the sufficient liquidity in the systems, Chinese household finally settled with a bit of a stabilizing real estate market. The wealth effect starts to settle in. They get a good job after, more policy get directed. People feel more comfortable and confident to spend.
Okay. You sold me on Harbin there, Xiaolin.
Well, I'm sold already. It's a beautiful place.
Ice sculpture.
You both go.
All right. Okay. You got to give me tips on what I need to wear, though. I need a thick jacket. Xiaolin, great to have you. Thanks for joining us again. Xiaolin Chen, Head of International at Crane Shares, joining us there. I just want to recap that breaking news that we just got here when it comes to Singapore. So we have heard that the city-state has charged the Minister Iswaran after this corruption probe. This is the Transport Minister, of course, and he, I believe, is the first key minister to get embroiled in this graft probe since 1986. So we have seen some action on this. We'll get you the latest on that in just a little bit. That renminbi fix just crossing here right now, Dave.
Yep, 7.1174 against the U.S. dollar. Some strength is coming through in the currency. I'd say this is perhaps your first anchor in these markets. You get a stronger renminbi, probably everything follows from that. Short term, of course, this can tend to serve as an anchor for risk assets across, not just in China, but across the region. We'll see what happens, of course, ahead of the open here.
Yep, still ahead of top market strategy. David Chow from Invesco is going to tell us what he sees for the year ahead. And the Fed holding off on those rate cuts for now until the end of second quarter. That is his interpretation of these markets here right now.
And ahead of that, Hong Kong's finance secretary says he's positive about the city's property market over the longer term. Our interview with Paul Chan is coming up next, counting down to the open of trade, 13 minutes away in Shanghai, in Shenzhen, and here in Hong Kong. Futures are pointing slightly higher this morning. This is Bloomberg Markets, China Open. Stronger fixing out of the PBOC today. Hopefully that might slow or even maybe reverse, let's see, this equity market downturn that when you look at this next chart, MSCI China is actually within about 5 or 6% of the low we hit during COVID-0, October 2022. We're getting close, but looks like we'll be pivoting away from that today.
Yeah, hopefully. The agenda here is what we're looking at. Of course, obviously, hopefully the stabilization stays. But yeah, as you talk about there, we're close, but not quite there yet to what we saw back in November of 2022. In terms of the agenda is what we're looking at today. Of course, still seeing there's any sort of fallout against this rout here. We're watching also ETF volumes, given that record turnover in some of these ETFs, on maybe speculation that there's some state buying going on, potential short covering. We're watching flows too as well, and some of these industrial metals, Dave, too, today.
In terms of data points, the unemployment rate comes out later today, and of course we're watching all the big index heavyweights ahead of the open today. If there is any buying in this market, it will start with this group. The open is next. This is Bloomberg.
There is, maybe a lack of convictions in the markets at this point. We've seen the 10-year that once again it's just like over 4%. So when you start combining higher interest rate, a lot of geopolitical flashpoints around the world, I mean, some concerns that maybe the growth rate in China was slightly below what people were expecting to be. All those things, I mean, get together and create an environment where investors are selling.
All right, there you go. The boss of the exchange ahead of the open, and we are focusing, of course, on movements in the exchange today following the rout that we had on Wednesday. Welcome back to the show, by the way. Futures are pointing slightly higher ahead of the open today.
Yeah, the Shanghai Composite. I mean, it was something that outsized moves, right? Yeah. We saw that big sort of move there of a 2%, which we rarely see. Hang Seng also, when you take a look at that as well, at least today, in the offshore markets, we're seeing some green, though. CSI 300, we're still kicking things off a quarter, well, I should say 0.5% lower here this morning. HS Tech is catching a slight bid. You're seeing when it comes to crude markets, a slightly lower. Industrial metals, which I'm talking about very much in focus. Iron ore is also lower, about 0.75% here. So it is slow going, at least, though, but we are seeing at least CGBs on the long end. The 30-year is catching a bid with 1 basis point lower here this morning. Flip of the boards and watching in terms of sector by sector, because basically yesterday, Hong Kong was the worst day we've seen in 15 months. Every single stock was down. Now we're seeing a little bit more of a nuanced approach here. You take a look at how, there is some green when it comes to developers here today, financials, consumer discretionary, the like here. But yes, it is still a mixed picture right now. In terms of movers, we're watching very much the big ones, right? And what really kind of led to this massive drop yesterday. And here's why we're seeing perhaps things have consolidated a bit. Alibaba is gaining about 1.3%, so maybe some dip buying there. Xiaomi still in the red. HSBC, these are the top four, one of the top four heavily weighted stocks on Hong Kong. And we're watching, of course, some of these tech plays, the Apple suppliers, the Samsung suppliers, just given the news that we've seen, this AI phone that Samsung unveiled as well. We're still watching how this plays out for the supply chain. Not a huge reaction. It's mixed. Sunny Optical, though, still lower by 1.5%. But we're seeing some green when it comes to AAC Tech. Let's bring in our next guest, David Chow, Global Market Strategist at Asia Pacific at Invesco. David, of course, we're still kind of reeling from what happened yesterday in Hong Kong. Would you recommend buying on this dip?
Well, I think buying emerging market equities on this dip, it wasn't just Hong Kong. We saw selling pressure on EM equities across the board. That certainly is due to continued uncertainty about the Fed's path and when they're going to cut rates and at what velocity. So I think that it makes sense to be opportunistic about picking up EM Asia, EM equities at this point.
EM's a big place, David. So do I pick up Taiwan, which was rocked yesterday as well? Korea, you mentioned that. Hong Kong's down 5% from, 48 hours ago. What do I buy?
I think EM in general across the board, especially we expect the dollar to weaken this year against a basket of EM currencies. So I think that one does want to be well diversified, especially this is a geopolitical year with lots of elections going on. So I think being broadly diversified across EM makes sense.
What do you think sparked this massive sell-off in China yesterday? What does it come down to?
Well, I think it came down to two things. I think some of the data that came out of China showed that we're hitting another soft patch with Chinese economic growth, and also some of the deflationary pressures have appeared again. And that certainly means that we're likely to see more fiscal stimulus and support by the government. And also we're starting to see investors kind of careening back and forth between when the Fed is going to cut or not. So there's a bit of policy uncertainty from the Fed. And also some of the, perhaps the tech stocks in China felt a bit of headwinds with the U.S. Iowa caucus.
Yeah, and I think, David, in fact, we have that soundbite from the former president, Republican frontrunner Donald Trump. Let's play it out, and we'll talk about it after. Let's play it out, guys, please, if we can.
I felt very badly for them. China had a crash yesterday in their stock market. You know why? Because I won Iowa. So when people, it's true, it crashed. So when people say, "Oh, I took in hundreds of billions of dollars from China," and literally as soon as those numbers started coming in yesterday, they had a crash, one of the worst numbers that they've had in years.
Yeah, David, I should also note that is an unsubstantiated. It's okay. There's no correlation to that as well. Markets did crash, I have to say. Let me put the question bluntly: Is a Trump presidency a threat for Chinese equity markets?
I think that Chinese equities, especially Hong Kong stocks or Chinese companies listed on Hong Kong, are disproportionately impacted by geopolitics. Especially, this is an election year in the U.S. and that the election is perhaps one of the biggest uncertainties compared to other elections around the world that we're seeing. So I think that we're certainly keeping a very close eye on the developments there in the U.S.
How are you looking at the U.S. market now? I mean, everyone was, last year warning about some sort of, earnings recession. We didn't quite get it, right? I mean, is this something that we need to be concerned about this year?
I think so. I think that maybe that bit of earnings recession could have been delayed until this year. What's going on in the U.S. is very uneven. The consumption and household spending continues to be very strong. But, some of the data that came out recently, such as the manufacturing, Empire State data, saw a significant drop. So I think that there could be a bit of unevenness in terms of growth in the U.S. this year. We expect a bumpy landing, which is a little worse than a soft landing, and perhaps starting in the third quarter of this year. But that certainly opens up the door for the Fed to start cutting rates in the second quarter.
Does that also open up the door, and we just had earnings from the big banks, at some point we're going to get the other big companies as well, for further earnings downgrades down the road, David, is what I'm trying to get to.
I think so. I think that earnings could disappoint a bit in the U.S. This year. The estimates seem a bit high to me, and so I'm not overly optimistic that this is going to be a great earnings year for U.S. companies.
The data that we've gotten out of the U.S., out of the U.K. overnight as well, even just the comment from ECB, Madame Lagarde, that rate cuts might have to be starting in summer versus spring. Are we just kind of too calm about where this disinflation trend is right now? I mean, is this really just something that's stalled right now, or do you think that these numbers that we're seeing around the world are just kind of a one-off?
Well, I think the disinflationary trend is certainly going to continue. It may be a bit uneven. There may be months where headline inflation might pick up because of food or energy prices. But overall, we're staunchly in a disinflationary environment. And I think the Fed is going to cut first, and then followed by the ECB and then the BOE. And so that certainly would point to the dollar weakening against a basket of currencies this year.
Okay, well, David, since you mentioned it, the Fed cuts first. Is that first in March or is that in May?
I think that's a big point of discussion right now. I think, Fed funds futures have certainly become a lot more aggressive. I think that it's probably closer to June.
David, pleasure to speak with you. David Chow there in Singapore for us, global market strategist, Asia Pacific at Invesco. Now, also in Singapore, and this breaking news just this hour or so, Transport Minister S.S. Swaran has been charged with corruption in the biggest political scandal to hit the country since 1986. He has pleaded not guilty. Avril Hong is with us in Singapore to talk us through the details. Avril, what do we know at this point? Okay, I think she's not trolling us, I guarantee you. There's some technical issues there. Okay, we'll try and get Avril back online. Maybe a little bit of a tease that she is there, of course. Okay, plenty more ahead. We'll get you guys a market update on how equities are trading 8 minutes into the session, plus the latest out of Singapore, plus plenty more. This is Bloomberg. Right, welcome back. So the breaking news this hour out of Singapore is the transport minister has now been charged with corruption. Take two, Avril Hong is with us right now. Avril, do you hear us, and get us up to speed if you do?
I do hear you, so let's try again. What we're hearing is the latest development in the biggest political scandal to hit Singapore in about 4 decades, and this is the first key minister to be involved in a graft probe since 1986. And we earlier this month actually heard from the anti-graft agency. It said it wrapped up months of investigation, but really it didn't give any indication of what exactly the wrongdoing was. And amid all all this after Iswaran was arrested in July, released on bail last year. We've heard very little details about the probe. So he arrived in state courts earlier today. He was flanked by his legal team, and he was handed 27 charges. This includes corruption and obstruction of justice, and he pleaded not guilty. He's since had his bail extended, but really, this is a case that has captured so much attention in Singapore, and it comes at a very sensitive time because not only is it one in a string of cases involving the ruling party. I mean, last year, for example, we also saw 2 lawmakers resigning over an affair. We also have this handover of power that is expected to come in Singapore with the Prime Minister, Lee Hsien Loong, who has governed for 20 years, set to hand over the reins. So this is coming really at a very sensitive time, and this is what we know so far from the corruption probe involving the transport minister, guys.
Yeah, can you tell us kind of what's behind these charges? I mean, there was a lot of talk of his relationship with the property tycoon, Ong Ben Seng. How are these two interlinked in some way?
Yeah, so I guess, well, at this point, I have to say that very few details have been revealed about the probe exactly, but we do know that they had a close business, a working relationship, so to say, and this is involved with the F1 event that Ong Beng Seng, the property tycoon in Singapore, was also running for a long period of time. So they did have a pretty close working relationship, and I think, you know, at this point, if I say further, it would be speculation, but highly likely that it was related to that very relationship, guys.
Okay. Avril, thanks so much for joining us with the latest there. Avril Hong joining us in Singapore. Let's switch gears to Samsung. Obviously, some big news that we saw overnight saying it's targeting double-digit growth for its latest flagship smartphone series, powered by a range of new AI features. Let's bring in Edwin Shen, our managing editor for Asia Tech, joining us now. Yeah, this is the new thing, AI smartphones. How much of an edge does this give Samsung over Apple?
I think we'll have to see. Samsung certainly is trying to take the early mover advantage. When I say we have to wait and see, I mean the user experience. It all boils down to whether these kind of AI features that they're touting are gimmicks or are they fundamental changes to not just the smartphone, but to the whole computing and the whole lifestyle experience.
Yeah.
And in a way, you kind of need to get the phones in the hands of the consumers before you really know.
I was going to say, I mean, I really haven't been using my Siri that much either. So, I mean, are these features really that special in any way?
Interestingly,
or are we not the generation to do that? It's the question I was
We're not the new generation to use these assistants and AI bots. I don't know, Edwin.
I think you got to start somewhere. AI
What can it do then?
We'll get smarter, we'll get more useful, and we'll get more impactful as it advances. The biggest impact, perhaps in the short term, might actually be in corporate use in the office, but that's kind of a separate discussion.
And you mentioned first mover advantage. We're certainly expecting other smartphone makers to follow suit this year with their sort of new releases too, aren't we?
I would bet that every new smartphone launched in 2024 will at least mention AI, if not put it at the center of their showcase. I think, as my colleague Mark Gurman has reported, Apple is also preparing to do the same. It's been working on its own generative AI for a while. But it remains to be seen if they're going to do a big splashy event around that this year.
Yeah, we also have TSMC earnings coming up, obviously part of the whole AI trade as well. What are we expecting today?
TSMC is going to be interesting. I think of all the big chip makers, they perhaps give us one of the more complete snapshots of the entire tech industry, from smartphones to computers to servers to, again, the demand for AI, which is apparently offsetting the slump in memory and smartphones and personal computers. So they're going to give us a quarterly outlook, and they will talk about the market in all its various aspects. So stay tuned.
All right. We gotta go. Oh, we have to talk about Apple too. Right?
Yeah, well, tell us about you teased us with Mark Gurman and his work there. Yeah, what else do we know?
Yes.
Yeah, don't leave us hanging. Just because we don't use AI.
The watch issue. Well, you guys saw the latest. They lost the ruling, which
Yeah.
essentially means they'll have to re-engineer, if that's not too strong a word, the watch to take out the health feature of it.
Blood oxygen.
In question, the blood oxygen monitor, as it were. Whether or not that's going to hit the bottom line, I mean, the watch is a big seller in many, many markets, including in the U.S. It's highly lucrative, we hear. So there might be some impact, but it's not like an iPhone, I think.
Okay, Edwin, thank you. Edwin Chen there, Managing
Thank you.
Editor for Asia Tech, covering all things tech for us here today. Yeah, maybe we do need an Apple Watch more than AI features to help us transcript things on our phones.
Yeah.
All right, some other tech stories are watching out for you today. Qualcomm says its business in China is increasing despite a tense tech rivalry between Washington and Beijing. The CEO, Cristiano Amon, spoke to us in Davos.
Our business actually with China actually increased as we diversify, our company not only into phones but into PCs and cars and industrial. We expanded our relationships with China.
The CEO of Chinese EV maker BYD says the company plans to invest $14 billion to develop smart car features. That includes an autopilot navigation system, which would allow drivers to take their hands and feet off the wheel and pedals in certain scenarios. Wang Chunfu did not give a specific time frame for the investment or any more details.
Okay, yeah, so you can actually wear your gloves and wear your socks. I guess in some ways, what would be the purpose, really?
Just chill.
Chilling. All right, a market that's not chilling is this Hong Kong market that's actually now, it opened okay. We're now below water, and while most stocks are still up, as you can see on your screens, 40 up, 35 down, the rest unchanged. So we're at least more evenly split than the 100% knockout ratio we had yesterday. Every single stock on this index and others as well were actually down. So we're relatively better in the first 18 minutes. This is Bloomberg. All right, more pressure coming through. This time it's in the A-share market, although Hong Kong, as you can see, is not much further behind right now. Just flat on the Hang Seng Index. HS Tech still underwater. CSI 300, 0.6%. Let's look at some of the big corporate stories that we're tracking at this point. JP Morgan President Daniel Pinto says that a lender is likely to raise its headcount this year. Speaking in Davos, Pinto told us that the bank has the ability to continue investing in its core business. He says JP Morgan sees opportunities in both retail and also in investment banking.
We are employing, at the end of this year, around 320,000 people. So the number of people that we employ has been growing and not shrinking. So I think that where we see opportunities and we can help our clients, for sure, we will focus on that. When I look at our plans, we will increase our staff this year, for sure.
Shares in Charles Schwab here paired some losses, and this is how we closed, of course, overnight after the company reported fourth quarter profit that was down by, well, nearly half. Net new estimates were also down 48%, while bank deposits declined 21%. So the CEO says 2023 was his worst time with the company since the internet bubble burst back in the year 2000. Staying in financials, Mizuho, that's a Japanese mega bank, is planning to ramp up expansion into private markets. A top executive says the company's $460 billion money management arm is considering buying a stake in a U.S. or European firm specializing in alternative investments. Mizuho is targeting a five-fold increase in alternative assets under management, equivalent to around $135 billion. Right, let's talk about pharma here. Bayer has laid out plans for sweeping changes, including, well, significant job cuts in its managerial ranks. That's the new CEO, Bill Anderson, seeks to revive the crisis-rattled company. The firm says workers have backed a new operating model that will mean slashing many employees along those managerial ranks. The job cuts will begin in the coming months and end in 2025.
All right, take a look when it comes to your markets here right now, and it is looking a little bit better if you take a look at some of these chip stocks, some of the Samsung supply chain. So Taiwan Semi, of course, they report their earnings at the end of the close in Taiwan this morning. We're down up about 1.2%. So can we invigorate this AI trade once again now that we got this election sort of risk out of the way? We're watching Sunny Optical, AAC Tech. Those both are up here right now on the back of this Samsung unveiling that AI smartphone. And Country Garden Services, we're seeing gains of 1%. So at least some of the sides of the property market and stocks there are doing a little bit better. There was some news from SCMP that Country Garden is preparing for a full exit in Australia. Country Garden itself is doing this at the bottom of your screen here right now. In terms of your dashboard, and we're looking at in China, it is a better story than yesterday, but that's not saying a whole lot, right?
No.
Hang Seng is above water here, but we've been kind of flipping between gains and losses here after just a few 20 minutes of trade or so. 0.4% higher. Shanghai still seeing a bit of pressure here this morning, Dave.
Yep, I'm looking at volumes too, and that should be indicative really of how much buying is taking place. We're also watching for things like short covering given the drop that we had yesterday. There's a specific part of the ETF market onshore. We're looking at turnover, that is China ETFs, because you had record turnover yesterday, which fueled speculation that you have, of course, state funds coming in and buying and supporting this market. At the moment, as you can see, we're better by a third of 1% on the regional benchmark. Dollar is softer. That's after 3 days of general strength across these markets. And global macro movers for you on your screens with, well, the likes of Australia still leading these declines. And we have some breaking news still out of Singapore. Go ahead.
Yep, we're taking a look at, of course, continuing this transport minister, Ishwan, that was charged on corruption. Now, he is stepping down, of course, after those charges. That is the latest when it comes to this probe. Plenty more coming up in the next hour of Bloomberg Markets Asia. Stay with us.